When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
Hey, it's Ryan Reynolds here from Mint Mobile. Now, I was looking for fun ways to tell you that Mint's offer of unlimited premium wireless for $15 a month is back. So I thought it would be fun if we made $15 bills. But it turns out that's very illegal. So there goes my big idea for the commercial. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3 months, $90 for 6 months, or $180 for 12-month plan required. $15 per month equivalent. Taxes and fees extra. Initial plan term only. Greater than 50 gigabytes may slow when network is busy. See terms.
Clear head start or a front row view of every single mistake that the industry has made over the last 25 years. This is a confession I want to make as an insurer who's been around forever, that our focus has always been on creating products that are easier to sell. How about making products and how about making the entire experience that makes it easier for the customer to buy? So we don't want to get so caught up in innovation and technology that the sense of the humane element of insurance is lost. Because at the end of the day, what you're doing is, it is one of the noblest occupation, if I may. Because if you are going ahead and giving a claim check to somebody who needs it at the time that they need it, that is really the proof of the pudding.
Hello and welcome to Why Not Mint Money, your go-to personal finance podcast. I am your host Anshika Kayastha, and today we're talking about life insurance. Life insurance is an essential part of financial planning, but the sector has also been going through significant change. While India remains under-penetrated, rising awareness and digital adoption are driving growth. At the same time, shifts in regulation and technology are reshaping how insurers operate and engage with customers. Joining me today is Sameer Yogishwar, Chief Operating Officer of one of the country's largest private life insurers, HDFC Life, to talk about what's changing in the industry and what it means for consumers. Sameer brings extensive experience across operations, technology, and business strategy, and plays a key role in driving digital transformation, operational efficiency, and customer-centric innovation at the company. At HDFC Life, he's been closely involved in strengthening distribution, improving the customer experience, and leveraging technology to scale the business. Sameer, it's a pleasure to have you with us. Let's just dive in. I think the first it is one of the leading life insurers, right? You've had a long journey of 25 years. Maybe starting off with what has been the journey like and what the next 25 years maybe mean for HDFC Life as a leading insurer for the industry as well.
Okay, so thank you for that, Anshika. So you're right. It's been 25 years in the Indian insurance industry, and I think I have been privileged to be part of it. So I actually started off my career with HDFC Life exactly when the industry was opening up to private. So it's first life insurance company, and I was privileged enough to be one of the first employees of the organization. So saying that HDFC has been around, or HDFC Life has been around for 25 years, it's a very glamorous thing to say. But the fact of the matter is that we've had a 25-year head start or a front row view of every single mistake that the industry has made over the last 25 years. So that's one way of looking at it. But the first 25 years have obviously been very interesting. The next 25 years, if I have to put it succinctly, I would say that the next 25 years, the challenge that we look at is how do we ensure that the Indian end customer is looking for insurance as a product that he or she will actually use rather than a product that he or she will actually buy. And I think that's the bit that all the insurance companies are going to be, that's the journey that they're going to be traversing. And I'm going to pick up a point that you made about the insurance industry being underpenetrated. So if you look at India, and I think that's the paradox that drives all of us, that if we've been there for the last 25 years, the industry has been growing. We are the 5th largest economy in the world. And that is really what's going to be, driving us. I mean, you could look at it as a problem, but eternal optimists like me and HDFC Life, we look at it as the biggest opportunity that we have. And I dare say that this entire insurance for all by 2047, this focus that the regulator has actually put in and what the government is driving is the single largest financial inclusion project that has ever been attempted in the world by any economy. I mean, you name, I mean, I don't think something like of this scale has been attempted even in large developing economies. So that's the way I look at it. So the next 25 years, insurance for all by 2047 is going to be the key theme, the key focus, and we believe we'll be very central to driving this, walking hand in hand with the regulator, the customer, and the government.
But we've had 25 years, and you've said that, gone through all of the changes and we've seen a lot of regulatory as well as industry developments happen over these years. But growth has still been slow. What do you think other than, of course, the insurance, government-led insurance target of 2047, what else is the regulator and leading insurers like HDFC Life doing to maybe get customers to engage with life insurance more and to look at it differently as maybe just a savings instrument as well as, beyond protection as well?
Right. Okay. So, I spoke about the fact that the Indian insurance industry, or rather the Indian customer, the end customer, has to actually start looking at insurance as a product that he or she is using rather than just buying. So that's one part of it. The paradigm shift in terms of how we think and over the last 25 years is that, and this is a confession I want to make as an insurer who's been around forever, that our focus has always been on creating products that are easier to sell. What we are trying to now do is that instead of making products that are easier to sell, how about making products and how about making the entire experience that makes it easier for the customer to buy? So the transition really is from easier to sell to easier to buy, and which is exactly what we are doing. One of the things that people don't speak about enough is the fact that if you look at this entire ecosystem, the role of the regulator in my view is one of the most progressive characters in this entire journey. And over the last few years, instead of being the speed limiter, I would say the regulator has become the accelerator in the insurance industry. Lots of things have been done. So, if you look at, say, the Bima Trinity, if you look at what has happened on the GST front, that, GST on insurance has been taken off, all of these are accelerators for the industry, and not enough is spoken about. I'll come back to the entire insurance for all by 2047. Again, this is something that the regulator has gone ahead and pushed. And in my view, what the regulator has done by a slew of these customer initiatives, making the entire journey better, they are mandating, or they have mandated that the issuance of the policy should be digital. Okay, the default is digital. Physical is an option, and some of these things has. And if I put all of this together, my view is that the plumbing for the entire industry has been done by the regulator. And it is for us and for insurance companies and large insurance companies like HDFC Life, which have to work on that plumbing and create more and more innovation so that, as you said, the penetration has not been, has not gone down to the last mile. And I think financial inclusion in any product only works if the last mile or the last end customer who has to be protected from any kind of financial shock is reached. And that is where companies like us come in. So whether it is doing, digital KYCs, whether it is doing, AI-led underwriting, whether it is doing instant issuance, whether it is doing, hyper-personalized products, whether it's doing servicing, which is completely, AI-driven, large part of that is done. That ensures that the last mile connectivity, if I may, on insurance is met. And once the end, as I said, that one person who's sitting right at the bottom of the totem pole manages to get the right insurance product for himself or herself, I think we've actually done what we've been threatening to do for the last 25 years. And I think we'll do it for the next 25. So that's my view on this.
Interesting point on digital, because I think distribution still remains one of the friction points, and we've had a lot of conversations happening around it lately, both from the regulator as well as about how the insurance sector in itself is very dependent on intermediaries as well as third party and distributors. We've had a lot of conversations about commission caps, etc. How is the distribution landscape changing, and how are you, especially when you look at talk about it from the context of digital distribution, how is HDFC Life navigating this shifting landscape maybe?
So Anshika, if you look at the distribution landscape, one of the common mistakes that insurance has made along with many other industries is that we look at India as one nice little homogeneous market. India is not one homogeneous market. Somebody says that India is, say, 20 markets stacked on top of each other. I'll go a step further. I'll say India is maybe 700 plus markets stacked on top of each other. And I say this because we have more than 700 districts out there. every district is different. So the textile trader in Surat is very different from the school teacher in Patna, is very different from the techie who's sitting in Bangalore. Everybody looks at insurance very differently. So the challenge for every insurance company, and the challenge for us also, is this entire story of hyper personalization. I will look at an insurance product very differently from how you would look at it, from how anybody else would look at it, and all these entities that I spoke about. So the challenge really is get to the person, decide and understand what the person wants insofar as insurance is concerned, hyper personalize a product for that particular individual, give the product to that individual, and then service the individual the basis of which is how the individual wants to be serviced. Somebody may want to be serviced by telephone. You can't take that away. Somebody may want the comfort of a real voice at the end of on the other line. Somebody may say, hang on, I'm Gen Z. I just want to work everything on WhatsApp. I don't have the time to sit and talk to people or stay on, hold for 14 minutes. Nobody wants to do that anymore. So the challenge really is that the distribution landscape is how do we reach them? Now, reaching the distribution landscape, you have various ways of doing it. The way we've been doing it, we've been obviously working very closely on the bancassurance side. I do believe that bancassurance is one of the most underrated channels. Bancassurance companies, banks, have spent the last 30 years in building relationships with the customers. I don't want to sit and recreate it. HDFC Life or any insurance company does not want to recreate it. What do we want to do? We just want to plug into it. We want to plug into those relationships, not recreate the relationships, and only expand it further. Give them the kind of product that they deserve because they're happy. And I work on the assumption that they're very happy with their existing banking relationship, and I don't want to ensure that any kind of product comes in which causes friction. So we work very closely with collaborating with the bancassurance partners. So that's the part on bancassurance. The second bit is on the digital side. I spoke about Gen Z. Now the end digital customer wants a specific kind of experience. They're not looking at an experience. They're not looking at how how any other insurance company is giving them service. They are comparing me to a cab company. They want instant gratification. They want the work to be easy, frictionless, and as simple as possible. So that is what I'm competing with. So that's the part on this. So that's the digital customer. I spoke about the bancassurance part. Agency. Agency is always going to be the mainstay of the insurance industry because it's a proprietary channel. It's a channel that we want to work with because that's the most, in some sense, personal channel that we can we can build. And again, what HDFC Life is doing, we've got almost about 97,000 new agents that we've hired or we've got onto our entire ecosystem. We have almost 2.7 lakh agents that are out there today selling our products. 80% of the newer branches that we've set up now are in non-tier 1 cities. So that's where the battle for distribution in some sense is going to be won or lost in the next couple of years. So I think that's the entire distribution landscape. We understand this well. We understand where the end customer is. We understand where the end customer and what the end customer wants. And we understand that India is not one homogeneous country. India is many countries stacked on top of each other. And the quicker we understand that, the more hyper personalized we get. That is where the battle for insurance in some sense will be won.
Could you maybe elaborate on how the distribution mix is changing, obviously, because you said you're looking at the agency channel a lot more. How is that maybe over a medium to long-term period, over, say, a decade?
So,
how do you see that shifting?
You see, the shift is, bancassurance is a very large channel. Yes. So I think bancassurance is going to be a preeminent channel. Agency, as I mentioned, is going to again be a preeminent channel. We do a lot of work with brokers. Yeah. So, brokers give the sense of, optionalities and various products that are actually end up, being made available to end customers. And if you look at the digital part, I think digital is something that is growing, and we feel that is really where the maximum, in some sense, delta is going to be insofar as growth is concerned. And our view really is, if you want to go to the, as I said, and I'm going to probably reiterate it at the risk of sounding repetitive, but if you want to go to the last mile end customer, it is digital, it is technology that is actually going to get you there. Because there are certain sections of distribution which we find uneconomic to serve. you have 3-step processes and 3 forms and so much of work to do to actually end up reaching that end customer. But these uneconomic sections are the ones that have to be served best, and that can be best served by technology. So the way I look at it is that the distribution channels are not going anywhere. I am very sensitive about every single distribution channel. I'm very sensitive about what every single distribution channel wants and what I'm going to end up giving them. But what I will do is that instead of saying that, oh, distribution is going to go here and distribution is going to go there, no. My view is that distribution is going to stay where it is going to stay. Preeminent channels like agency, bank assurance, broking, direct are going to stay where they are going to stay where they are. The challenge really for me is how do I use technology and supplement these channels much better, so that every channel, the last mile conversation that they have with the end customer becomes that much easier. So that is the way I look at distribution.
You touched upon insurance being underpenetrated. You also mentioned that a lot of the lately branches opened by HDFC Life have been in tier 2, tier 3 cities. HDFC Life has been over the last 2 years, if I'm not wrong, accelerating the approach to customer onboarding and customer acquisition. Again, being at the cost of being redundant, how is maybe technology helping you in this outreach and onboarding sort of processes? And how do you sort of also maintain that balance between technology at the back end and at the customer facing front end in terms of how you look at the investments as well as maybe managing the customer onboarding process, customer experience as a whole maybe?
Okay. So if I understand this correctly, the entire push towards digitalization or technology is what you're saying. So I'll answer this in a... Okay. So I'll answer this in a slightly more comprehensive way from a perspective of where the insurance industry is right now insofar as customer acquisition is concerned. Sure. Okay. Now, a very contrarian way of looking at it is that I probably have to thank the pandemic. As unfortunate as it was, it did 2 things. The first thing it did is that no amount of marketing budgets that insurance industries have used over the last 25 years helped in creating the kind of awareness that unfortunately the pandemic created. So the awareness is there. So in my mind, the battle for awareness is closer to being won than what we think. The challenge right now is the battle for execution. That is the way HDFC Life is looking at it. Awareness is there. Awareness is absolutely out there. And that is a tough part. So as I said, it had a dual purpose. So the first purpose was creating the awareness, which I think the pandemic created. The second thing is when we started working from home and when we realized that technology and using, as I said, last mile technology is really the key. So when you started doing things like digital KYC, when you started doing, AI-led underwriting and stuff like that, because you wanted to move completely paperless, because it was not a choice. I mean, we had to do it. So that is the second thing that happened. So most insurance companies started changing the way we work. And instead of more, personal touch, it started moving into tech, and which is where it went. So as I said, uneconomic sections started becoming easier for us to serve. That is where the entire push towards technology, innovation, AI, etc. started moving. So I have the awareness, I have the digital assets today, but at the same time, I'm acutely aware of the fact that insurance as a product cannot be deconstructed. You can't unravel the spaghetti bowl and just say that, hey, insurance is a product that can be run completely digitally. You cannot take the human element out. So the challenge for us and challenge for every insurance company out there is going to be that if we are going to be navigating this entire path of ensuring that everybody gets insurance, which we are very, very centrally committed to the 2047 agenda, you still have to do it with the empathy that only a real human can bring in. So that is what is driving what we are doing. So we don't want to get so caught up in innovation and technology that the sense of the humane element of insurance is lost. Because at the end of the day, what you're doing is it is one of the noblest occupation, if I may, because if you are going ahead and giving a claim check to somebody who needs it at the time that they need it, that is really the proof of the pudding. So, which is where the little bit of balance between technology and the humane element is something that we always want to maintain. And it's very easy to get swept away and get carried away by tech and AI and all of this and innovation, and lose the human touch. We set up the company basically to pay claims. That's it. Everything else is secondary.
So from what I understand, what you're trying to say is that there is demand even in tier 2, tier 3 cities. It's just about matching the customers with maybe the right products and reaching them with the right approach.
Absolutely.
I think a challenge also always has been around claim settlement in insurance, and that has always remained a concern point for customers. As successful as claims ratios might be for a lot of the insurers, the only time you hear complaints are against claim issues, right? And how is maybe that changing in terms of course, we've seen claims ratios consistently get better over the years, but we've also now in a stage where due to digital and technology, we're also seeing a lot more frauds happening as well. How do you, as a again leading insurer, deal with issues of claim settlement, and is technology helping improve settlement ratios?
Okay, so great question, Anshika. Technology definitely is at the forefront of the claims process. Now, again, the key about the claims process is that as an organization, as an industry, okay, the moment of truth is really when you settle the claim. Everything else is the promise. Okay, you can promise the moon. The claim settlement is the delivery. That is the way we look at it. Now, if you look at claim settlement ratios, you very astutely indicated that claim settlement ratios are going up. I mean, I represent a company where HDFC Life very proudly says that my claim settlement ratio at an aggregated level is 99.8%, and for retail claims is 99.7%. You also at the beginning of the conversation said that I am the chief operating officer of the company. As the chief operating officer of the company, what is that one metric that keeps me awake, or which is that one metric that I have to continuously focus on? If I look at 99.7, 0.3% of claims are not getting settled. My job really is to take care of the 0.3. 99.7 is taken care of. So that's the way we look at it. As I said, we set up this company 25 years ago predominantly with the idea of paying genuine claims. And I think that's the element of genuineness in anything that we do is where technology also comes in. So some of the work that we've done on the AI part is the fact that when the policy is or when the proposal is coming in, you underwrite it. Now, there are only two times when you underwrite a policy, when it's coming in or unfortunately when there's a claim at it, right? And I would like to underwrite everything upfront. So what we're doing is we're using technology, we are using all the information and data that we've built over the last 25 years to be able to correctly predict how genuine is the case. Is this a case that can actually land up creating an early claim or a fraudulent claim for us? Because the most important part is that paying a claim that is not supposed to be paid is actually doing a disservice to all the genuine customers who are actually sitting in my underwritten pool. And we don't want to do that. So as I said, 99.7%, as you can promise. But the delivery is that, now look at the scenario where there is a family that has potentially or probably lost its primary breadwinner. There is a safety net out there, and the safety net needs to work. And if it works within the first 8 hours, okay, that is really the ultimate moment of truth for our product and for our industry. And what bothers me, and I say this very responsibly, is that I do find some companies and some conversations around trying to create the claim settlement process, okay, as a matter of, I completed it in so much of time and all of that. The issue is not that, right? You can't dehumanize this. The claims process cannot be dehumanized. You can't deconstruct it and just reduce it to a simple algorithm that, I did so much. So while I say that 99.8% or 99.7% has been settled and I'm worried about the 0.3, I'm also worried about the human aspect of ensuring that 100% claims get paid out within X number of hours. And I think that is exactly what we're trying to do with technology. So technology not only helps us at the downstream part of it, wherein you settle a claim quickly, immediately, instantly.
How is the technology part working differently or similarly to maybe the traditional bank-led, branch-led models when it comes to claim settlements? And then are you integrating the technology into the branch settlements that happen, and are you also then upskilling, training your branch level employees in how to maybe use technology to make these claims processes faster and easier?
Absolutely, because I'll answer this from an AI perspective. Because a lot of people say AI is out there and AI is going to do this and AI is going to do that. You have the naysayers who say that there's no AI, and most of the POCs fail, etc., etc. Right. My view is completely different. I'll tell you what my view is. My view is that if you look at AI from a technology standpoint, AI is already out there at scale in most, at least in the insurance industry, it's already there. It has moved away from the hype. Okay, it's actually gotten into execution. I mean, we use AI across, across every level. There are so many POCs working. There are so many integrations that have already happened, and people are being trained on it. And often people say that, oh, it's either going to be AI or it's going to be human. My view, and to answer this question very simply, is that I only look at AI as something that is going to help the human to work better. So it's not an either or situation. I see it as a human who is supplemented or becomes more efficient at the work that he or she is supposed to do or expected to do by using technology. So if I can use technology to scrape away all the non-value added activities that an individual is supposed to do, if I scrape away or rather if I give the person the right nudges and the right inputs, okay, this is the way you have to deal with it, then all I want is that I want that entity or I want my person to just integrate or marry his or her human element, which can only come with being a real live breathing human. Integrate that with everything that technology is helping you with. Integrate that with all the time that is now available at your disposal or the understanding that is available at your disposal, and deal with the end customer in a much more humane way, because what you're talking about is really a product that takes care of you when you most need it. So, which is exactly the philosophically, that is where we are heading. So we don't see it as a either or situation, and I don't go around telling people, oh, you're going to lose your job to AI. You will not lose your job to AI. You will probably lose your job to somebody who uses AI better than you. I think that's where it is.
Great that you mentioned it, because my next question was going to be about AI, but I think you broadly covered it. But maybe as from a customer's perspective, our exposure to AI when we deal with an insurance company is mostly on the customer grievance or when we may be getting queries answered, etc. You mentioned that you use AI from your end-to-end processing across processing points. Maybe what are some of the other use cases we're seeing where you're seeing AI really come into play at this point in time for you as well as the industry as a whole?
So, yeah, I did mention that we use AI very extensively. And it actually covers the entire spectrum of activities. So when I say things like if I'm digitally onboarding a customer, that works beautifully with AI. If I'm doing AI-led underwriting, so a lot of underwriting work I can do by using AI. I do things like digital KYC, etc. That happens really quickly. We've set up things called early warning indicators. So I have an early warning indicator when I think I just mentioned it earlier, that when a proposal is coming in, there are multiple, when it starts passing through the process, looking at the profile of the customer, looking at the PIN code where the customer is coming in from, the kind of product, and some of the other variables. A lot of it is our secret sauce. I'm not going to, speak it out on this podcast. But a lot of this starts telling us, there are some cases where there are a lot of these bells, which start ringing that, okay, there's a problem, needs to be investigated a little further. So we do all of that. We have moved on to situations where, we are very sensitive about complaints. We don't want complaints. Because at the end of the day, this is the last thing you want. A customer is unhappy with the product, is unhappy with the servicing, etc. So we also have early warning indicators for complaints. We have something called a complaints predictor. So we can actually predict that, hey, the tonality of this customer is not really great. Maybe there is something we're getting wrong. Let's pick it up before it ends up becoming a complaint, because we don't like complaints. We are allergic to complaints. So that is the other thing that we're working on. Look at it also from a talent retention perspective. We have started integrating technology even at the level wherein we are hiring people. So if I'm hiring a frontline salesperson, I'm running that through technology or AI, which tells me whether this person is the right fit for this role, right fit for my organization. What that does is it takes care of attrition. My attrition numbers have started coming, and we've been seeing meaningful dips in our attrition numbers post implementing an AI-led filtering process, if I may. So the moment that starts happening and the more people stay in the organization, there is stickiness. People understand the DNA of HDFC Life, stick around in HDFC Life longer, manage the relationships better, whether they're managing an agency channel or whether they're managing the bank assurance channel or they're going direct, whatever, whichever way it works. So we start seeing that. So, and the more we embed the DNA of people, of the company of HDFC Life, very carefully constructed DNA that we are very proud of and very territorial about, the more I inject it into people who stick around, the easier it is. And the more they stick around, the more the DNA gets, in some sense, supplemented or enhanced. So yeah, this is across the spectrum. We have intelligent nudges. So if you are a sales professional, you could be sitting at the branch, you could be on the agency channel, you could be out on the road. We'll give you intelligent nudges that, hey, do this. This is a customer, this is the kind of product that this customer needs. This is the kind of conversation that the customer likes. Here is a quote, here is a business illustration that you can use. So it's gone to that level.
HDFC Life also, of course, has rolled out Project Inspire, which is a technology project, led project. Of course, you've spoken a lot about what the company is doing on the technology front. Is that largely what the project hopes to achieve? Maybe a little bit about what the main objective of this technology-led sort of undertaking that you've taken over as a company. Yes.
HDFC Life, in a nice way, we are a creature of habit. We keep doing this. And we do this not because there is something wrong with technology. We just do it because we want to be future ready. So, and I can say it with a little bit of authority because I've been in this company for the last 25 years and I have seen this happening. So we've set up a nice little technology platform. The technology platform keeps, getting better and better and better. It has to change with the times. So what we've got right now is something called TEBT, which is technology-enabled business transformation. That is the platform that we're using right now. Platform working well, doing everything that it needs to do, but we want to make it more future-ready. And to make it more future-ready, we've embarked on this project called Project Inspire. It is a completely different way of working. We are moving from a monolithic structure to a more platform kind of structure wherein you're plugging in pieces. Right. It makes the system more efficient. It makes the system more scalable for business, and importantly, it makes the system more configurable. So tomorrow, if we want, and the regulator is doing so much. You've got use and file. You've got the sandbox philosophy. So a lot of this is helping. As I said, the regulator has created the plumbing for it. Now, if I want to use the plumbing, and if I want to go out there to the end customer, and I want to give the end customer the best product at the best possible price, at the fastest possible way, with the best customer journey experience, I need a system that can help me do that. I need a thinking or an architecture enterprise-wide that can help me do that, which is really what Project Inspire is trying to do.
Very interesting. I think that's it for today, bringing down the curtain on a very insightful conversation. Thank you very much for joining us, Sameer. As life insurance evolves, the focus is shifting from just selling products to building trust, improving access, and delivering better customer experience. For consumers, that means more choice, better service, and hopefully greater financial security. To our listeners, if you enjoyed this conversation, don't forget to subscribe to HT Smartcast podcasts. Until next time, spend wiser, invest better. This is Anshika Kayastha signing off. Thank you.